In this video, guys, we're going to look at what's the best index for day trading. Hey guys, welcome to. So I know a lot of you are currency traders out there, but I also know a lot of you are kind of considering trading perhaps one of the indices. Maybe they're picking one of the indices, or a thicker commodity, or something that's more interesting. So or maybe not necessarily more interesting, that's not fair, visit currencies are very interesting, but adding another string to your bow is probably a better way of putting it. So let's have a look at some of the things that you might want to consider in an index for day trading only. Now, if you're swing trading, really, I think you've got a lot more selection, but for day trading, there's some very specific things that you really need to look at to make sure that you're not wasting money unnecessarily, giving yourself the best possible opportunity for success. Okay, so the first one and the big one is the spread. So if you're trading via a CFD or a spread bet, for example, or even if you're trading direct on the exchange, it's very important that the spread is tight. Now, on the exchange, the majority of the time, the spreads are going to be tight, whether you're trading the Hang Seng, whether you're trading the Nikkei, whether you're trading the DAX, whether you're trading the FTSE, S&P 500, whatever it may be, they're going to be reasonably tight, and the exchange fees and broker fees are going to be dependent on your volume anyway. But, so this is maybe more pertinent and more useful for CFDs and spread bet traders. You want something where you've got a tight spread, because if you're day trading, you're going to be trading potentially multiple times a day. Potentially you're going to be trading in and out. You're going to be, even if you're very active or not that active at all, you're still going to be doing maybe 1 or 2 trades a day, and that spread can add up. If you're doing 10 trades a day and the spread is 2 points, you're wasting 20 points just to get in, just to start business, just to get anything going, regardless of whether you're making any money or not. So being cautious of that. Now, the big ones like FTSE, big ones like DAX, FTSE, DOW, that kind of stuff, they've all got a really decent spread. What have I missed out there? DAX. They've got a really decent spread. Even CAC's got not a bad spread. SMI's got a bad. They're all pretty okay. But the important thing we need to do is stage 2, which is look at the range of the day. Now, this is very important for day traders, guys. The spread and the range. Those two combinations, the combination of spread and range is key to longer term success in day trading. Let me give you an example. If the spread is what you perceive reasonable, let's say it's a point, but let's say the range of the day is only 50 points, you are really putting yourself at a disadvantage. 10 trades in a day, you've got 10 points you've got to make up on a 50-point range day just to break even. You can see how you're really making your chances of success very slim. So, but if it's a point, and let's say the range of the day is 200 points, 300 points, all of a sudden that becomes irrelevant. So it's very crucial that, and I've gone through cycles, guys, where I've been day trading, say 10 years ago, where the market has been quiet. Actually, probably be longer than that, probably 12, 13 years ago. The market starts going quiet, the range contracts, the spread's still the same, and all of a sudden that edge that you had when the range was massive goes dramatically, just because the market's different and you're paying more and you've got to kind of get more out of the trade. All of a sudden it becomes a losing proposition. Your strategy you're using, you have to put on hold, put on ice until the volatility picks up again. So be aware of that, guys, the spread and range. Now, I'm going to have a definite answer to this. At the moment, it is going to depend on when you're watching this video. If you're watching this video, you need to go and have a look at the range of the market versus the spread. Like I say, the spread's a point, the range is 100 plus, you're probably okay. If you're in that sort of ratio, so 100 to 1, you're probably okay. So tick moves, 100 to 1, not too bad. You want more than that, really, but that probably gives you just enough, the minimum. Any less than that and you're really in difficult territory. I mean, that's really got to be the minimum. You want more than that, preferably, but it's really got to be the minimum. So watch out as well for stuff like the S&P, because its spread is often on the spread betting firms 0.1, but actually in the exchange it's 0.25. There's a little bit of discrepancy there, and you've got to do your own maths behind it, and you might have to do your own maths as well for certain other indices that you're looking at. But FTSE, Dow, DAX, and this is why I prefer generally the DAX to the FTSE, for example. Now, I know that the FTSE is actually picking up a bit more volatility, but the DAX tends to be way more volatile than the FTSE. And don't forget, it also comes down to the current price of the index. If, for example, the FTSE is trading at 3,000, like the CAC is often less than the DAX, SMI, etc. DAX is more higher priced, Dow's more higher priced in terms of the actual digits. So I'm talking, okay, this is 20,000 as opposed to 3,000. Okay, and if you've got a 1 point spread on those, then the range percentage wise, let's say the range is 200. The range percentage wise might be okay, it's only 1%, but then if it's 1% on the 3,000, then you're only 30. If you've got 1 point spread, you can see. So generally higher priced stuff is better. So a lot of the Asian indices are higher priced. Like I say, the Dow's higher priced, DAX is higher priced as I'm doing this video. FTSE's sort of middle of the range, and then some of the thicker indices like the Euro stocks tend to be lower priced, actually a lower figure. So that's the important thing. Because we're trading, day trading, we're looking to get ticks or points or pips if you're coming from the FX world. You will want that higher price so that we get that range, but also reminding ourselves that we need that spread to be tight, because often the brokers will say higher price, higher spread. So something thick, and the Dow and the DAX is great as well, because Dow and DAX are higher priced, but the spreads are nice and tight as well. All right, let's move on. Volatility. So we want volatility, but not too much, right? We don't want to be crazy where we can't grab on anything. We want, really, a perfect scenario is when a move happens, it moves in an extended way. So we don't want chop as in flicking up, flicking down, because that's quite challenging as a day trader. What you really want is when you get a setup, let's say you get a breakout, you get a double bottom, it moves in one direction very strongly before an opposing direction. That then becomes, for my pool of strategies, becomes a nice market to trade. It's going to be different for each person, but that's generally what I want. Don't want too much, don't want too little. So there's that. The other thing is kind of more of an operational perspective, guys. Hours and after hours. What do I mean by that? So you've got to wrap it around your lifestyle. If you are a day trader and you're trading the Asian session and you're in Europe, you're going to be up at 2 a.m., 3 a.m., 4 a.m. Does that fit with what you want to do? Are you going to be able to sustain that? Does that work? If it does, then great. If not, then you don't want to be trading the Hang Seng, you don't want to trade the Nikkei, you don't want to trade those things. You want to be trading European stuff, or maybe you don't. Maybe you don't want to be up at 6:30, 7 o'clock for the 8 o'clock open. You want to be, you're doing other things, and maybe you want to trade the afternoon session for the Dow, which in the UK would be 2:30 till 9 o'clock. So the hours are very, very important. And so once you've decided the spread in the range and you've got your kind of basket of acceptables across the world, now you can say, okay, well, which ones will I actually want to trade? And then you need to look at the after hours. What I mean by this is a lot of brokers will offer an after hours, as will the actual exchange, but a lot of brokers offer after hours their own price as well. And that might depend, and that might influence your decision, because if you're trading, let's say you're in a good trade, and well, I know we've kind of defined day trading here, but let's say you're holding it for a couple of day move, or the market moves up, you might want to say, well, I'll hold this, but I don't want the gap risk. Now, if the market closes at that time and you can't trade until the morning, then you've got significant gap risk to deal with overnight, which you may not want. If it has after hours trading, i.e. it chugs along, like Europe, for example, will chug along and almost mirror the US move, and then it will maybe close for an hour or so, but then reopen with Asia, much thinner. But the point is you can still be stopped out, your limits can be tagged overnight as the market moves, which might be preferable to you, or it might not if you've got a gap strategy. Again, this is the kind of things you need to work out for yourself. So what is the best index for day trading? Let me answer the question in my opinion. My opinion is the DAX is one of the best. I like that for specifically for my time frame that I'm in, and specifically for the volatility. I like the way it moves. I like the way that it can spike, but then does have clean moves when it goes. I feel that personally, I can get a better read on the DAX than I can the FTSE, but I know people who make money on the FTSE as well. And also the Dow. If I'm trading the US stuff, the Dow. These are my two go-tos, guys. I know that S&P really is more the crowd favorite out there, but for me, you know, I think the Dow, especially when it's a higher price, when it's lower price, it's a little bit slow. Even though the Dow components are boring and dull, from the setup in terms of the spread you can get with the spread betting brokers, the range it does, the hours just suit me personally, and I like to trade the Dow. I know that the 30 stocks in it are reasonably dull, and the Nasdaq's probably more spicy, but the Nasdaq spread is a little bit wider. I don't find it as cleaner. So those are my two go-tos. Doesn't mean they're the right ones to trade. I think there are plenty that could be on the list. The Nasdaq is definitely a candidate. FTSE as well as a candidate for some. I think Euro stocks a little bit thick and a little bit small, a little bit of a big kind of ship to steer around. So my preference in answering the question is Dow and DAX. But for you, go through this kind of list, and then you can pick out the ones that suit you for day trading if you want to trade the indices. All right, guys, take care, whatever you're doing, and I'll see you in the next one. Bye-bye.